Welcome, Shawn Ridley from Kentucky. Great to have you here. Tell more about you.
I've been in the wealth management, investment banking, private equity space for a long time, over 35 years. And I got my start in Boston, moved down to Louisville, Kentucky almost 30 years ago and helped a company. I was recruited by a company that had 600 million in assets under management, recruited to 6.6 billion in 7 years, sold out to a nice big bank. And I ended up years later starting a multifamily office called Atlas Brown. And we had, in a few years, over $1 billion. And that was very successful. And, I had an inkling about what was going to happen in 2008, because when Bear Stearns money markets went off $1, I was like, there's a real problem out there. And we weren't really equipped, meaning Atlas Brown, to do investment banking and private equity at that time. So I started Ridley Capital Group in 2009. And so we have some private proprietary funds.
Which trends are you seeing in the market at this moment?
Well, obviously AI is really big. You're into that, right? I think a lot of wealth management firms are mostly through the public markets, right? So I think it'd be healthy for a pullback. Obviously, we see power gen, aerospace. We're following both those areas quite closely. We see trends in that space globally that are very powerful and hopeful.
Would you like to share something, maybe more you have on your mind?
I migrated away from family offices and wealth management. They are our clients now. I used to be, the head of multifamily office and then, big trust company. And the thing that is really important is that I feel like the way most people made their money is usually in one company, their own company, right? And they build it up and or they were part in at an early stage and they built this wealth and then it's sold and they want to diversify. And that's fine. I think that's smart. And I think diversification is really a key to successful portfolio. Over diversification is where mediocrity comes in. And a lot of managers out there, you don't have to be a cowboy. You don't have to go out there and swing for the fences, but you also don't need to have hundreds and hundreds of holdings, because if you have that, you're going to have all sorts of, you may have some winners, you're going to have a lot of average, you're going to have a lot of failures. And what I'm getting at is failures take all the time. If you are, and you got to admit a mistake. I can tell you stories where I can't, and everyone who's honest and has that humility I talk about has mistakes. And, it's interesting how, one kind of approaches these things where and I call it, if you're not sleeping easy at night, meaning the wealth manager, right? Then I probably shouldn't be in that investment. I remember I did that with a big auto company back in the 90s and wasn't sleeping well at night. And I reassessed it, wrote a letter to the clients, and we only held it for a couple months and we were long-term investors. And I told them why. And I got more phone calls and compliments for admitting that. And I don't even think we took a loss. But anyway, sleeping easy at night is an important thing.
I think that's a very good advice. And also being honest to your clients.
Everyone appreciates truth, right? And honesty. And, look, no one's perfect. And if you have a portfolio, my favorite portfolios I've told you in the past are, less than 20 stocks, right? And then maybe some real estate holdings or some alternative investments. But with that said, these portfolio managers who have 200, 300 stocks in their portfolio, they don't know what they do. And it's just kind of, you're just going to be average. That's all you're going to be, right?
Those are very wise words to close off.